So for those of you who are trying to find stocks in the Indian market for breakout, this video is going to be very helpful. If you are looking for growth stocks or momentum stocks, you need to first filter the stock market. There are almost 5,000 stocks in the Indian stock market. So you need some filters to come down to a list of 100 stocks. And out of those 100, you could go with one or two stocks that you want to buy on a particular day. So the goal of this video is to create a filter, use that filter to go from 5,000 stocks to around 100 stocks. And from that 100, you can look at the charts. And from those 100, you can look at the best setups, stocks which are consolidating, which are already in an uptrend. Okay. So for that, I use a platform called MarketSmith. Now I use the pro version. This is very helpful. Let me explain what I do here. The pro version is very much affordable in India. Okay. There is also a free version. Check what is available in the free version. I have not checked. Since it is very much affordable, priced reasonably well, I have directly gone for the pro version. Okay. So I go to MarketSmith and I log in here. So once I log in, I go to idea list. Now in idea list, if you scroll down, you see there is build your screen here. So I click on filter India stocks. Okay, so this is what I get. So I already have filters here. See, filter. So one is bread and butter, then one is hidden gems, and third is promising gems. So these are three filters. But first, let us switch off the filter and see how many stocks we get. So let us give it some time, maybe a few seconds. It will show us the list of all the stocks in the Indian stock market. Okay, we'll see how many stocks are available. And then I will put filter and I will explain to you all the three filters here. So pay careful attention to this video so that you understand my thought process behind each filter. Okay, so I'm giving it this some time. Let it open. Okay, I think there should be roughly 4,700 or 4,800 stocks. Roughly 5,000 stocks should come up. So let's see how many stocks are coming. Give it a few more seconds, maybe 10-15 seconds more, because it's a long list. But when you filter, it doesn't take this much amount of time. Remember, our goal here is to look at all of these thousands of stocks, put the basic filters. The basic filters allow us to go from 5,000 to around 100 to 150 stocks. And out of those 100 to 150 stocks, we can go with 10 stocks, the 10 best setups for the day. And out of those 10 best setups, we can look to buy one or two stocks. So as you can see here, see, it is still opening. Takes time. I have a LAN connection. It's a very fast internet connection, but still it is taking time. So anyways, you can see here 4,939. It is not allowing me to click here. Once it does that, we can move forward. But this video is extremely important. Yeah. See, you see 4,939 stocks. So now I come to the filters. Now, first filter is bread and butter. So this is my first filter. Okay. So you see price strength is greater than equal to 70. This means any stock which has done better than 70% of the stocks in the Indian stock market, I want to look at only those stocks. Okay. So for example, if there is a stock which has given a return of, let's say, 70-80% in the past 1 year, and it has done better than 70% of stocks in the entire Indian stock market, okay, then that stock will come under this filter. So the price strength should be more than or equal to 70. This filter means we are looking at the top 30% of the entire stock market in terms of its annual performance. Okay. This is buyer demand, this is institutional demand. A and B means the stock has institutional demand. Then this is group rank. Group rank means there are total 197 industry groups. These are like sub sectors. So out of those 197, I am choosing only the top 40 industries. So if I have to summarize these three filters in one statement, I would say that I am selecting the best stocks from the best industry groups with institutional demand. Let me repeat that. I am only looking at the best stocks from the best industry groups, and that too having institutional demand, high institutional demand. Okay. So I'm already going with the winners because I am a growth. I want to invest in breakouts. I want to invest in growth stocks. Any stock that meets this criteria, but it is currently consolidating, that stock is a prime candidate for a breakout. Okay. After this, then we need to put some technical filters because we need only those stocks which are liquid. We don't want penny stocks and things like that. So I'm not putting fundamental filters or not. I am not putting pattern recognition filters. Technical filters. Let me open this here. So look at technical filters. Yeah. The price of the stock should be more than or equal to 20 rupees. So this is applicable to Indian stock market. For the US stock market, I have made another video. But for Indian stock market, the price should be more than or equal to 20 so that I don't get involved in penny stocks. The rupee volume, how much the stock is trading on an average per day. It should be more than 1 crore rupees. Okay, 1 crore is 10 million rupees. The average daily volume should be more than or equal to 200,000 shares. So this is 2 lakh shares. So these three filters ensure that I am not getting into penny stocks and I'm only buying liquid stocks. It is easy for me to glide in and glide out of these stocks. Then comes price versus 52-week high. So this is minus 25. It means that the stock is near its 52-week high, but it is not more than 25% below the 52-week high. Okay. So I only want to look at stocks which are near their 52-week high and they are not more than 25% below their 52-week high. Okay. So that is why I have written greater than or equal to minus 25 from the 52-week high. Again, 52-week low, I want stocks which are at least 25% above their 52-week low. Again, this represents strength. These three represent filters, liquidity. Okay. And then daily price changes more than or equal to minus 5. See, any stock that has fallen, let's say, more than 5% yesterday. Now, that is not a good candidate for a breakout, right? Because if it has to break out, it first has to travel that 5% distance and then go up, right? So that is not the ideal stock we want. We want stocks which have fallen, but not more than 5%, okay, on a particular day. So basically, if I have to summarize this bread and butter filter, the reason why I call this bread and butter is because this is something I use on a daily basis. Okay, this is my prime filter. So if I have to summarize this in two statements, I would say that I am buying the best stocks in the best industry groups with high institutional demand and which are not penny stocks, which are liquid and which are there near their 52-week high and which have not fallen by more than 5%. This is the summary statement of this filter. Now, if I apply this filter, okay, let's see how many stocks we get. Okay. So now give it some time. I have applied this filter. So we had 4,939. Okay. Now see, out of 4,939, we get 74 stocks. So these are the 74 stocks I'm going to look at. I am going to look at each chart, each of these charts, and whichever stock is consolidating, okay, currently, that stock is a prime candidate for buying. Now, how to identify a consolidation, that you can look up in my other videos. But these are my candidates. Out of these 74, I will look to extract 10 stocks for my next day's watch list. And out of those 10, I want to buy one or two stocks for that particular day. So that's my strategy. Now let us tweak this filter. Now imagine instead of these two industries, I go down in the industry ranking. So from rank 1 to rank 40, we have already covered. Now, instead of these two, if I go to this from 41 to 60, I am reducing the industry rank, which means I am going to a substandard industry. So, which means I am increasing my risk. So, if I use this 41 to 60 rank industry groups, then I will have to compensate for that risk by increasing the price strength. So if I select this, then I have to select good or great price strength. So which means if I'm looking for industries with a rank of 41 to 60, then within those industries, I only want those stocks which are doing better than 80% of the entire stock market in terms of their annual performance. Okay, that is the summary statement. So that is called hidden gems. So see, I'm going for, instead of these two, I'm selecting the fair rank, okay, from 41 to 60. So I'm going down in the industry rank. So I'm increasing risk. So to compensate for that increased risk, I am looking for increasing price strength. So if I'm increasing risk in industry, I am compensating for that risk by going into only the best stocks within those industry. Now, why do I call these hidden gems? Is because we are looking at the best stocks in the industries which have not moved up in their rank. Okay, so basically the stock in the industry is moving, but the industry itself is not moving. Okay, so this is a very important point. So this is one filter. That's why I call them hidden gems. So these are great stocks, these are hidden gems, but they are stuck in an industry which is not moving. It's like the lonely horse that is running. Okay. Other filters I just keep constant because they are liquidity and relative strength filters. Okay. Now imagine I go down the industry rank. So from 61 to 100. So there are total 197 industries, so roughly 200. So if I go from 61 to 100, okay, now I'm going further down in the industry rank. Okay, so imagine how much risk I'm increasing. These are poor industries. Okay, so I'm increasing risk. So how do I compensate for that? To compensate for that increased risk, what I will do is I will increase the earnings strength. Of course, I want price strength. Of course, I want institutional demand. But now I'm also demanding earnings. So that's why I have the next filter, which is promising gems. So in here, what I'm doing is I'm lowering the rank, but I'm adding the earnings criteria also. If I go here, see, now the rank is 61 to 100, more than 60, less than 101. Okay. So you can go here and do the settings. You can click here and do the settings like greater than 60 and less than 101. Okay. So that's the filter. Institutional demand is there, price strength is there, EPS strength is there. This means that now if I have to summarize this, these are stocks which are having industry rank from 61 to 100. These are having institutional demand, they have great price strength, and they also have earnings strength, which means these stocks are earnings wise, they are doing better than 80% of all the stocks in the Indian stock market. Okay, so best stocks in terms of earnings, in terms of price, in terms of institutional demand, but in terms of industry, they rank poorly. So that is why I call them promising gems, because these are the stocks that can pull an industry up. Both of these categories are stocks which can pull an industry up into the 40 rank, which is the bread and butter industry rank. So the difference between these three filters is that we are moving down in the industry rank. So when, as you move down, your risk increases. So to compensate for the risk, you play with price and earnings. Okay. So bread and butter, you had 74 stocks. Hidden gems, you will have, let's see how many. For hidden gems, there are 31. So 74 plus 31, that is 105. And promising gems, you will have another 20 stocks. Yeah, another 20 stocks. So 105 plus 20, so roughly 125 stocks you have out of 4,939. Okay. So out of 4,939, if I am selecting 125, which means I am rejecting like 99.9% of the market. Okay. And out of those 125, I want 10. And out of those 10 on my watch list, I will buy one or two the next day. This is the level of filtering that I'm doing to get into the best stocks with best setups for a breakout. And the stocks which I find through these filters, when I take the trade, I have explained each trade that I have taken using these filters. I use these filters to find the stock I put, and then it breaks out. Okay, not every stock will break out, but those that break out, you can check how I have taken and executed the trade and where I have booked the profit and where I have put the stop loss. So I hope this video was helpful to you. Use MarketSmith. It makes the job very easier. Once you set up these filters once, you don't have to do it again and again. You just have to refresh this daily. And I have taken the pro version. You can take the free version or a trial version and see what features they are offering. If they are not offering these features, then directly go for the pro version, because I've been using this for a very long time, and it's fantastic. Within seconds, I get 100 stocks. Okay. So basically, I am rejecting like 4,800 stocks roughly out of 5,000. Fantastic. Without even looking at the chart, I get the best stocks which are prime candidates for breakout. So I hope this video was helpful to you, and you will start using this filter to identify the stocks which are already showing relative strength, which are liquid, which are not penny stocks, which have institutional demand, good industry ranking, good earnings as well. These are the stocks where you will find the best candidates for future growth. Okay. Thank you so much. If you have any questions, just mention in the comments section and I will do my best to help you. Okay. Thank you so much.